Yeah, this holiday's over. Holiday's behind us. Time to get back to work tonight. It's Tuesday evening. It's June the 1st, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a fantastic video in store for you guys tonight. Charts are all ready in the background, as you can see. S&P's ready. Nasdaq's ready. Gold is ready. Got a bunch of big moves on the charts here. Boy, had a big move up and a big move right back down. But here's the big question on my mind as we go into Wednesday's trading session. Can the sellers really hold this right now? Because I know, everything's bearish. S&P's bearish, Nasdaq's bearish, gold is definitely bearish. But I'll tell you, the Nasdaq and the gold, something's going on out there. They don't look as bearish as first meets the eye. So my big question for tomorrow is, can these bears really hold on to this? S&P looks great. Got some great shorts I'm looking for on the S&P. But I'll tell you, Nasdaq and gold got some curveballs, it looks like, the way the day finished at the closing bell today. Not to worry, by the end of tonight's video, I'm going to break down my favorite setups, both long, both short, for all three of our favorite markets here. You'll be ready for tomorrow no matter what we get. But I'm wondering right now, is this as bearish as it looks at first glance? We'll go into more details on why I say that, how to capitalize on it here in tonight's video. Before we jump in though and get this party started, hopefully you guys had a great Memorial Day holiday weekend. Before we jump in though and get back to work tonight, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe, and when you do, hit a little bell icon so you always get notified every time I publish something new. And also, don't forget, if you guys have any questions, don't be afraid to type those questions in. Drop those questions for me in the comment section. I would love to answer all your questions, so don't be bashful. Drop those questions in. And as always, if you guys enjoy the video as much as I enjoy making it, if you tune in every evening to watch this nightly newsletter, do me a big favor, hit that like button, that thumbs up for me here on this video. Always appreciate you guys carving out some time with me every evening on this video. But make sure you subscribe, hit that like button, and drop those questions if you got them below here. Enough of the intro, though. I am a little bit behind schedule here tonight. It's been a busy day in the office, but let's finish up strong here and get ready for tomorrow. S&P is bearish. Nasdaq is bearish. Gold is bearish. What a wild start to the week, right? This is very common when Monday is a holiday. I mentioned this briefly last week, but sort of busy week last week. Whenever Monday is a holiday, we oftentimes, that Tuesday coming back is a bit of a rebalancing day. So it wasn't surprising to see the market go all the way up and come all the way back down today. It's just kind of the way those kind of Monday holidays, when the markets are actually open on Monday, but very small, we do get a lot of movement as we go back into Tuesday. We kind of rebalance as the week gets under control here. Long story short, though, we're bearish across the board. S&P's pretty straightforward, right? We're bearish pretty much in a range right now. I'd love to sell some pops on the S&P. Would love to trade some breakouts going lower. Got a couple really nice levels we're watching for around that 41.80 area. The S&P is a walk in the park compared to the rest of these markets. Nasdaq and the gold, something's up. The Nasdaq's not that bad. Nasdaq is bearish into a trading range, but the way in which we overshoot the low of that range, you'll see tonight, it's not going to be easy to get short on this Nasdaq tomorrow, which always makes me think, let's look for the buy side here. Now, obviously, we're very bearish. There's a big, strong move down. So I'm looking for shorts in the Nasdaq, but I'll kind of talk about what some scenarios would be. I would love to grab a reversal on that Nasdaq for tomorrow. So we'll see what we get on this. I'll walk you through more on this once we get in the charts here this evening. And then you got gold. Something smells funny about the gold. Something smells funny. We definitely have that strong move down. There's no doubt about it. I will be looking for shorts here on the gold, but I'll tell you, the way this thing closed we should be right at those lows right now. Something's up. Something's up. Now, maybe not a reversal just yet, but it definitely makes me think about the buy side for tomorrow. I'm looking to sell it short, but I got to be careful because of the way it closed. And again, I'll talk about kind of why I say that and how we'll trade it here as we go deeper into this video here tonight. Again, by the end of the night tonight, you'll know exactly the plan, how to take the best trades and avoid the worst trades for tomorrow. Now, speaking of tomorrow, though, let's make sure we're all on the same page here. It's going to be a strange week this week because, again, Monday was a holiday. Today was kind of that rebalancing day, right? Monday, the markets were actually open on Monday. Very low volume, very little volatility, very small session, right? So, the market pretty much does its thing on Monday. We have that rebalancing on Tuesday. And tomorrow's the day where we really start to kind of feel like, okay, this is what these markets want to do as we go into this first week of the month. Now, anytime I say first week or last week, you always want to think volatility, right? So volatility is always expected to increase as we go into the end of the month and we transition into a new month. And so here we are right now transitioning out of the month of May. And as crazy as it sounds, we go into the first week of June. So first week always expected to be a little more volatile than other times of the month. Now, the first week of the month always tells us we have the crown jewel on Friday is an employment number at 8:30 Eastern time. Everything will start to shift their focus towards that non-farm payroll number at 8:30 Eastern time on Friday. That's kind of the the crown jewel of all the news that first week of the month. Every first Friday of the month, you're going to get that non-farm payroll, and that's the big news of the week. But as you saw today, though, we definitely have some pretty good inflation reports, right? We saw some inflation today on Tuesday. We're going to get more on Thursday. I'll tell you, you definitely want to be at your desk on Thursday for those inflation reports. As we saw today, right? Big moves on these inflation numbers right now, and everybody's talking about inflation. They got podcasts, for crying out loud, about inflation. So everyone's talking about inflation right now, which means as we go through the rest of the week, especially tomorrow, right? We got Evans, we got Harker speaking tomorrow. Will any of these Fed speakers tomorrow, right? That's one thing on our radar for tomorrow at 12 o'clock. Will those Fed speakers, will they go rogue? Will they start talking more about inflation? So far, the Fed speakers have all kind of towed the line and said, nah, inflation's only temporary. It'll balance itself out once the economy gets right. That's what we've heard from all the Fed speakers. Will Evans, my boy, will he get us, really moving off that tomorrow? I don't know, right? I don't know, but that's definitely something we're watching for tomorrow as well. Will these Fed speakers, or will we get any new updates regarding inflation? What we're looking for is a Fed speaker or an announcement that inflation has become a concern for the Fed. We haven't heard it yet. Tomorrow, though, we may hear more about that. That is on our radar for tomorrow. There really isn't a lot of other news tomorrow on Wednesday until we get down to that beige book at 2 o'clock Eastern time. Now, I love the morning session in our trade room. We trade every morning, 8 o'clock to about 12 o'clock, right? That morning session Eastern time. But I'll tell you, though, tomorrow afternoon looks like potentially a pretty big, pretty active afternoon. We got some Fed speakers at 12 and that beige book at 2 o'clock Eastern time. The beige book is always a bit of a question mark. You never know what you're going to get out of that beige book. But again, because everybody's thinking about inflation, traders will be watching that 2:15 announcement, right? It comes in at 2 o'clock. They'll read on through it. Usually by 2:15, 2:30, you'll start to see the big reaction to that beige book. And again, what traders are looking for right now is, remember, the beige book are the notes from the FOMC announcement 2 weeks ago. When you think Fed, you think inflation right now, right? When you think inflation, you think about them raising rates, tapering off stimulus. That's why everybody is so obsessed with this right now, because once they mention that word inflation is a concern, that's when people start thinking the stimulus will start to be withdrawn, the tapering, the raising of rates, and that should, of of course, right, bring down everything from the housing market, right, to the equity markets. It's a big deal. So we're definitely thinking that tomorrow at 2 o'clock in the afternoon. Again, it's always kind of a question mark. We don't know how much we're going to get out of that beige book. That is something we're definitely watching here as we go into the session or the afternoon tomorrow. I wouldn't worry too much about that ADP employment number. That number is not going to be much of a market moving event. That will most likely be a comparison tool for Friday's non-farm payroll number. So I wouldn't worry too much about that. But the Fed speakers at noon and the beige book tomorrow, those are definitely going to be some potential market moving events here as we transition from the morning into the afternoon session tomorrow in our trade room. Now, speaking of trade room, don't forget every morning we get together 8 o'clock Eastern time and we're going to trade this stuff together. I would love to have you there, right there with us. What I'll do is I'll put a membership link for you guys to get registered and come out and join us every morning at 8 o'clock Eastern time. I'll put that membership link for you in the description of this YouTube video or from the blog right now. Put a big button below me tonight on the trading blog. So that's the meat and potatoes here of the week. Increased volatility. Everything starts, again, everything watching inflation, everything focused on that Friday non-farm payroll number. Not a lot of news tomorrow, but the news we do have has potential to really send things moving. Fed speakers and beige book. And we'll talk more about probably the next big block of news is on Thursday morning at 9:45 and 10 o'clock. We'll talk more about that here tomorrow night on the next edition of our newsletter. Let's get off the screen here now, get back to our charts here. Let's get ready here for tomorrow. Everything is very bearish right now. S&P, Nasdaq, gold, everything's pretty bearish. Let's start with the S&P. The S&P is the easy one for tomorrow. S&P, of course, had a strong run higher, which I'm sure most of us, right, saw that happen in the pre-market. Most of us were counting sheep and catching Z's and, right, sleeping while the market ran higher. What was very kind of classic, rebalancing was to see the market run lower on a Monday holiday, snap higher, and basically come right back to where we left off last week. Right now, we're bearish. We've got what looks to be like a spike in channel here for the most part. It's what it looks like right now, which is great because spike in channels make our job pretty easy. We would imagine right now the bears are trying to complete a pendulum swing back on the other side of that range. Big target right now for the sellers are at 41.80. You can see that pendulum swing. If I look left from last week's levels, I've got this range from last week, if you recall. The amount of the move above the range is the amount I'm projecting off the low of the range. Think of a range like a magnet, right? Ranges are balanced markets. What goes up will oftentimes come crashing back down, usually pretty symmetrically on the other side of that range. You can see an example right here, right? They go up, they come back down, they take out that low, and they make that run. So that's where these bears are assumed to be hunting for right now, is that 41.80 area. And you can see that 41.80 area, 41.78, that is no slouch. That is a very, very big number down there at 41.80, 41.78 areas. So that's definitely where we are assuming these sellers want to get to, that 41.80, 41.78, 41.77 range down there at those lows. Right now, as the markets open up in Asia, it's pretty easy to see this spike in channel again. You can see that channel coming down here, which is good because if it starts to go sideways, you'll notice I have this range on here just in case it does want to go sideways in a range. It doesn't look like that is the case here right now, but you'd be wise to keep your eyes on a possible range here. You can definitely tell there maybe you're starting to see, again, a bit of still bearish, right, but into a trading range here. For right now, though, it's a spike in channel. We'll see if we get a range overnight, and we'll trade this like a range if we do get it overnight. The most important thing right now is I want to find a way short. I want to find a way to get short before we finish off that pendulum swing. Simple as that. My favorite trade right now, if we look at this as a spike in channel, Spiking channels are something we talk a lot about in our trade room. They're one of my top 5, chart patterns that I think every trader should learn. They're very common and they're very consistent in the way they love to pull back to the base of that channel. What happens is you take the first pullback. Remember, it's a spike going down, right? There's a spike. There's your channel. Take the first pullback, and right where that kind of the channel runs into the base right there, that is typically where you've got the most amount of sellers are waiting here to get short. So if I had it my way tomorrow, I would love to see this thing bounce up, get a buyer failure coming in, and short that thing with a failure into pullback combination. That would be my favorite trade here for tomorrow. Again, bear market down. We know where the bears want to go. They want to get that pendulum swing. Can I get up, right? Can I get up inside that sell zone? If I can, that will, chances are, confuse some of these buyers, make them think this market has reversed. If those buyers can take the bait and try to get long off that moving average pullback, we now know exactly where their stops are. A very classic pullback in a spike in channel. We're waiting for the pullback into the base of that channel, and I'll apply that failure pattern. One of my favorites is a failure into pullback combination off of that high. Again, we are simply waiting for buyers to get caught buying that pullback or selling into their stop losses. And one of my favorite kind of follow-ups on that is as the moving average comes back over, sellers begin to re-enter the market and they want to grab that first pullback, a failure into pullback combination as we get that bounce up off of that low. That would be a great way to get short here for tomorrow. What if we don't get that pullback though? How would I sell this thing as the market goes lower? That's a very viable option. This market may just simply tank and go lower here. At that point now, I remind myself those 2 important questions I'm always asking you guys in the trade room. How's my location and how's my momentum? At that point, momentum is great, but location isn't a great spot to get short down here. Why wouldn't I want to sell down here? There's not a lot of meat on the bone left, right? There's not a lot of good profit left for the risk I have to take. I can't risk small to earn large as we get underneath this 4190 area. We see a lot of these situations every day where you've got good momentum. I do want to be a seller, but I don't want to sell too aggressively here. So in these situations, these are definitely where traps come into play here. So a trap entry short will definitely be the smartest way to do this as we try to make that move going lower. Now, traps are great, especially when you can combine them off the high of a new channel. So don't be afraid to kind of get rid of this big channel, find a new channel here. If I get trap off the high of that channel, that will really make me happy here in the overnight or the early part of tomorrow's trading session. So again, if we see a pop, I want to sell the pop. If we see a drop on this, I want to short that drop. I don't want to chase it, again, because I want to make sure I use those traps to make sure I'm not again, getting a good risk-reward ratio on that trade. So that's some food for thought there, right, as we go. Now, I can also be a buyer on this. I can also buy this as well, right? One way to get long on this would be a reversal. I have no problem with being a buyer on this. The problem we have, though, is the buyers simply don't have any momentum right now. 2 ways I'd like to buy this market. One of them would just simply be a 1, 2, 3 reversal pattern, right? That means a relatively strong jump up. Doesn't need to be very strong. Just get me above the moving average and then show me the buyers will hold that pullback. If the buyers can hold that pullback, right, that gives me a 1, 2, 3. Now remember, if the buyers don't hold that pullback and all they can do is fail, I'm going to sell that failure, right? So remember, we're not buying that first pullback here. If those buyers fail and we want to short that sucker back down in that trading range, right, with a failure pattern, right? However, if the buyers can hold it if they can get this pop off the low, and again, I'm not going to buy the first pullback, but if they can jump off the moving average now there's a big bullseye now, right back up at that high, which could easily happen. Again, tomorrow will be a day where, again, today was kind of a rebalancing day after that Monday holiday. Tomorrow will be a day where we really find out what these markets are made of, and the buyers could easily come right back in here and take control with a 1, 2, 3 right reversal pattern there. Now, we don't want to buy it as it's going higher here. I want to mark up that high. I want to mark up that low. And I'm going to buy that first pullback. Again, one thing about me is I want to get a good risk-reward ratio. Momentum is great, right? So if I can get this 1, 2, 3 to turn momentum around, now all I need is to find an entry on that first pullback. You don't want the second one, the third one. The first one is the one you want. And what I'll do is, this is a 7,000 tick chart right now. What I'll do is I'll drill down to a 1,000 tick chart, and I'll find an entry trigger like a bear trap or a failure pattern. We oftentimes see off the lows of those new channels, we'll oftentimes see a trap entry right around those lows into a failure pullback combination. These are very, very common on a faster time frame. Now, I realize I'm going over this stuff really quickly right now. I'm not going to go over all the fine details of the actual entry techniques that we'll use tomorrow in the trade room, but I will definitely cover those smaller entry technique details along with a whole lot more as part of our free trading course. So I would definitely grab that free course. I'll put a little pop-up there for you in the upper right-hand corner. If you're serious about your trading career, if you want to get a deeper dive into my favorite entry setups, we'll talk about entry techniques, trade management, how to know when to take them, when to skip them. We talk a lot more about those entry techniques and the entire 3-step strategy as part of our free trading course. Again, grab a little pop-up there in the upper right-hand corner. Everybody loves that free trading course. You'll get hundreds of examples of how we apply this stuff to our favorite markets. You'll love it. So grab the link in the upper right-hand corner for more details on that. I also would not mind a reversal off the pendulum swing. So let's say, for example, the market does tank and go lower here. What I'd be looking for a buy setup off the low. Now, keep in mind, we are very likely here going to see, if we do go lower here, a strong move down. We may get one of these bounces, a buyer failure, and then back down to that low again. It all depends on how strong that move down is. What you want to think about, though, is to buy this thing is if we do see it make a run lower here, the best way to buy this is to wait for it to retest the low and then wait for sellers to try twice. Once, twice, and buy into their stop losses. That will be another pretty easy reversal. And then also, too, you can grab a new hidden channel and buy that first pullback off that low. Okay, this is a great potential reversal. Now remember, the challenge will be as the market runs lower, if it runs lower on strength, you don't want to fight that direction. Momentum is very strong if it runs lower on strength. What you'll want to do is look for that short. And we'll do this tomorrow together once we kind of know what the strength looks like. Look for that short to retest. Right, remember, anytime you see a strong move down, you know the odds are pretty good they'll get one more leg. So even though we're at support, if we have enough strength going low, what I'll do is I'll look for like one of these little shorts, right? It'll be like a little buyer failure above the 21 EMA there, right? Get that buyer failure, run it back down to retest that low. But then once they get that retest of that low, now you've got the bears. They've got everything they want. Now the bulls can go get their own, right? Now, again, we're at a great area to buy, but you want to respect the momentum of the sellers, right? Let them try once, let them try twice. Once I've got those, again, once I have that strong move down, they try to make that retest of that low, then bears come in. They try once, they try twice. Now they're boxed in. Now their stops are right above the high, and I can buy right into those stop losses with a slightly more patient variation of a failure setup, right? One of my favorite reversal patterns, we call these nested failures in our trade room. And again, you'll learn a lot more about those in that free course I mentioned in the upper right-hand corner. Now, remember, don't forget too, is that when we run those stops, we oftentimes now will run higher. You can grab a new trend line off the high, a new trend line off the low, make that new channel. And again, right, first pullback is always the best one. This would be great. Failure into that first pullback. And again, right, I'm not going to buy that as a pullback, right? It'll usually be a bear trap or a failure trigger. We'll talk more about that in that free video course, right, that I mentioned before. But that will be how I would buy this market off of that low. The key is let them take the lows out, find that short for the retest, and then go after that reversal back up into that range. Let the bears get theirs, right? And then the bulls can get theirs once they're done. The only variable I haven't talked about tonight is this range, right? If the market does end up kind of settling into this range, not a lot changes. Just make sure you focus on selling at resistance levels above that range with failure patterns. We'll know more tomorrow, and once we know more tomorrow, we'll be able to navigate more of that tomorrow morning in our trade room. So do keep an eye on that. If it does start going sideways, that's when you want to start looking at these levels of resistance overhead and combine, again, those failure pattern setups, right, to trigger the entry to sell above the top of that trading range. I'm sure there's something I forgot tonight, so we'll go over more of that tomorrow morning in our trade room, but that will give you kind of a good rundown of where I would like to trade this market here for tomorrow. Let's keep going, though. Nasdaq's up next. Nasdaq is a lot more difficult than the S&P, and the big reason is this overshoot at the lows right now. Now, much like the S&P, the Nasdaq, of course, came out of last week's range, right? There was a range last week on the Nasdaq, right? The market, of course, ran up, and then as you can see here, the amount above the range was pretty much completed on the other side, right? It's one big difference. They're very similar to the S&P, right? They're both bearish. They both get that big move up and that big collapse back down today. But if there's one big difference you can see, and that is they've already completed their pendulum swing on the Nasdaq right now, where the S&P still has plenty of space to go for that pendulum swing. It's one of the biggest differences here on the Nasdaq. So in all reality, the Nasdaq doesn't need to keep going any lower whatsoever, right? The Nasdaq does not need to keep going here at all. It's already completed what it set out to do here earlier this morning. What is very interesting about this chart, though, is the fact that, A, we have a very strong move down. Anytime we see a strong move down, right, that leaves what I call an open loop. It's like unfinished business for the sellers. So strong move down, there's a very good chance we retest that low in the short term. It may reverse because you'll notice above it is a range above it. That's probably the trickiest part of this chart here going into tomorrow is you got this range. And so what it means to me is it means we have a strong bear move down into a range, but now we're rotating off the low of that range. Right? Now remember, if we didn't have this information ready, let's say for example we didn't have that. Right? We don't have that overshoot of the low. If we didn't have that overshoot of the low, I would say, oh, this is easy, right? Let's find a level of resistance above that range and let's just short that, right, that resistance level with a failure pattern, right? Just like I talked about on the S&P a few moments ago, right? That would be a great trade, if we didn't have that big bear move down. Again, the bear move is great. It gives a lot of it gives a lot of momentum for the bears, but it really makes it difficult for me to want to sell that pop, right? Because that pop higher is not just a pop above the range. It now is a rotation off the low. See, now that looks a whole lot what? Yeah, it looks very bullish if you go popping higher here right now, which really paints this. It makes it very difficult. This is not going to be a very easy trade to sell short tomorrow on the Nasdaq. Now, again, we do have a very strong move down here. That strong move down tells us that I really should be focused on the sell side above, really until we retest that low. right? Like the S&P, right? I mentioned the S&P. If the S&P makes that strong run down, you want to respect that momentum, let them retest, and then look for that reversal back up, right? That's exactly what I'm looking for here on the Nasdaq here for tomorrow. And literally, the only way I can really get short this thing is if I can see some strength going lower here. What would my favorite trade be here for the Nasdaq here tomorrow? The only real way I can safely and kind of confidently sell short right now would be a two-try trap running lower. Strong move down, shallow pullback, lower low in price, trap high. That's probably the only safe way you'll be able to sell this thing as we're going lower. Again, momentum's fine, right? There's no problem with momentum. Momentum's the easy part of this. We know we're bearish already. The hard part is where exactly do I get my risk small, earn large trade here? Where exactly do I have open space to work with? Not right there. And if you go lower, you'll notice that 13,570, which by the way is the same level from last week, not much has changed here. We have a ton of support there at 13,570, 13,547. So this could easily V-bottom right off that low and just rip higher, because you'll notice, what is this, right? What is this? It's a spiking channel. You see it? It's one big spiking channel. And what did we just talk about in the S&P? What do spiking channels tell you to do? Buy the base, right? So, I mean, that is like, if you're looking to be a buyer right now, that is a great spot to get long, right? So again, you can see why I'm looking at this going, okay, how exactly do I justify shorting this thing right now? So you really got to be careful the sell side right now. The buy side it just looks so much easier than short side here right now. Again, the only reason why I have to even look at the sell side, and I could obviously, you can ignore the sell side right now if you want to, but you've got this open loop down here. That to me says you've got to be very careful trading against a strong move. So how would I sell this? The only way I can sell this is a trap. Again, I like momentum, but I hate location. So traps are going to be your bread and butter as you go lower. That strong move down, shallow pullback, lower low. Get that trap. And again, mark that high. Mark the lows, mark the highs. If possible, can I get that trap high off the top of a new channel? I mean, that would be great, right? That would be about as good as it would get there on the short side going lower. But again, that's about it, right? That's about it. Now, obviously, and this of course would also apply to the S&P. Let's say we take the lows out. This has been the way to sell this thing tomorrow, right? Let's say we take the lows out overnight. Right? Take the lows out. The bears come in. They hold this and they blast. Right? So again, remember, big strong move down. They want to take those lows out again. Right? They want to retest those lows. Let's say they get that retest now. Right? The bears close their loop. Right? The bears take care of business. And they come in, they go, no, we're not done yet. We're selling that next pullback now. And they do one of these guys. Right? They blast it right through that low here. At that point now, the writing is pretty obvious. Mark up that low, mark up that high, right? Find that first test, that first pullback off the high of that channel. Yes, I do realize there's all this support down here. But remember though, if you have enough momentum, you should always be able to rely on that next pullback, right? That's why I said before, right? If we have enough momentum, you're going to get one more leg, right? So if we take the lows out, right, hold that pullback and jump going lower, if we get that jump off the moving average, you better believe it. There's a very good chance here you're going to get that nice short off the top of that channel. The problem is you just got to wait for it, right? You don't want to take the first one. That's the problem, right? That's always kind of the hard part about this. You don't want the first one here, right? You want that second one as we take out those lows and run. Now, as I mentioned before, this is a big spike in channel here. The good news is, though, man, if they really run this thing, right? If this thing happens to crack below that low, look at all that wide open space down there. 13,400, 13,356. Those are easy magnets there for the bears. But I'll tell you, though, the bears have had plenty of chances here the last few weeks. You can see, let's look left. right? The bears have had plenty of chances to grab this. Will this be different? Again, I'm not overly confident in the sell side as we go lower, but I do have to respect it because of that short-term momentum. So keep your eyes open for the traps and those breakouts as we go lower. How do I buy this market right now? Buying it, again, I think is the easy way to do it. What I would do is, my favorite buy trade right now would be take out these lows and then get a nested, right? Let the bears try it once, let them try it twice. You know, once those bears try a couple times, their stops are just waiting to be ripped higher, right? Buying the stop losses. And of course, remember, those failures almost always turn into a first channel pullback. So keep your eyes on that, right? It'll be again, a nested failure. Why nested? Why do we care about twice? Because we're not bullish, right? We're bearish right now. And as much as I think that level is a great support area, I don't trade what I think. I trade what I see. And right now, we see a hell of a lot of bears, at least 4 right now. So as we go lower, give the bears the benefit of the doubt. Let them try a couple times. Once you see those bears try a couple times, you know where their pain is. It's right there. So buy right into those stop losses as the market rallies higher. And then don't forget, don't chase it, right? Don't chase it. Grab that pullback. And again, I say pullback, but in all reality, this is a 4,000 tick chart, right? Upper left-hand corner there. I'll drill down to an 800 tick chart and grab a trap entry, a failure entry, a pullback entry as we come off the lows of that channel. And again, you'll learn more about those entry techniques we use in our trade room. You'll learn those smaller details in that free video class I mentioned earlier. So make sure you grab that if you want to get the most of our time together on this video newsletter. The next one here would be a reversal, right? Basically, a couple ways to trade a reversal here would be a 1, 2, 3 reversal, 1, 2, 3 reversal, right? So 1, 2, go. Mark up that high, mark up that low. My job now is to find a way in using any of my favorite entry setups off the low of that channel, specifically getting in before we go back up and retest those highs. If the market was to really jump higher, strong move up, shallow pullback, higher high in price, traps, baby. That would definitely be the entry pattern you want to look for if the market really starts to sprint, right? If it really, really runs higher here, look for that shallow pullback. It'll barely pull back to the moving average. And then, of course, grab that trap. Remember, there's always extra bonus points if you can find a hidden channel here. They're not absolutely necessary because you've got enough momentum. Your location's fine. It's just would love to find a channel entry off the low. Anytime we can get a channel entry, always going to increase our odds of success. So now you can see why I'm concerned about the sell side and why I would love to either buy either a bounce reversal off the low or a 1, 2, 3 reversal pattern as we go higher here. Remember though, stay out of the middle. If we do end up settling in here into this range here, right? If the market does go sideways, not a lot changes. I still like the idea of the buy off the low. I really like the idea of the reversal going higher as the longer we stay inside this trading range. And again, I'm sure I missed something tonight here in this video, so I'll make sure we fill in those blanks tomorrow morning in our trade room. Let's wrap things up here now with the gold, the yellow metal here on our radar for tomorrow. Gold looks, again, at first glance, gold looks really, it is very bearish. I mean, come on, Joe. Let's not mix words here. It's a bear market right now, but this one really it just smells funny. If we have such a strong move down for gold and they get this beautiful trap, right? Strong move down, shallow pullback, lower low. I mean, come on. What are they waiting for right now, right? Why is this not right at the low of day? That was the first thing I thought of when I came back from lunch this afternoon was, wait a second. Why the heck is gold not right at the low of day right now? That really, in all reality, with that much strength, that's a gorgeous short setup. Why are we not, again, why did we not close the day at that low? So, of course, that kind of leads me to think, well, okay, what else is really going on right now? It's pretty easy to see what else is going on right now. We have that range. Now, again, Monday was a holiday, but we have that kind of that half, the markets are open, but they're not open very long, the low volume, right? Today's that rebalancing day after Monday's holiday. Tomorrow's the day where we really find out what these markets are built with, right? Tomorrow's the day we really find out what they want here. So you'll notice we had that bull market up last week into what is pretty much a range, right? It's pretty much a range right there. I probably could maybe go a little bit higher on that range, if you wanted to there, but this whole area there, that's a range. So what I did was I measured the amount above the range, I measured the amount below the range, and you can see what happened. Right, you can see what happened here. It looks like they got a little bit overdone, right? A little bit overdone of that pendulum swing. The bears got their pendulum swing. They made a run lower, and it's almost like they realized, oh, shoot, we are way too far ahead of ourselves. Back in we go. And you can tell, right? They hold right there. And I think that's probably what's going on here right now, is the market is a very bear market, but just like the Nasdaq, they have that little overshoot down there, which really, really makes this a very, very bearish right now. But again, something's up, right? Something's up. This thing really should have closed, if not right its low, it should have closed right down near its low there. Just a very, very a big miss there for those bears. So my big problem right now is if I can't sell short with that trap, at this point now, I'm worried there's something there I don't quite know about. And because of that, I want to get short this market, and I'm looking for a short, but I really got to be careful because even though I have a lot of momentum on my side, it's location. Location is what I'm concerned with. So much like the Nasdaq, I'm looking for a trap. Right? A trap entry as we go lower. I would love a 1, 2, 3 breakdown. That would make my job pretty easy. But at the same time, though, a buy-side trade would really be nice too. Especially if the market was to go higher here, this could easily be whipping up a big pendulum swing back up to retest those highs. Again, you almost have to take today with a bit of a grain of salt because it's a rebalancing day. Tomorrow's the day where we're going to really start to see what these markets are made of here. So my favorite trades here on gold for tomorrow, as the market goes lower, to be a seller, really there's two things I'm looking for right now. There's a big target down here, 1884.3, that big low from before. That's where bears are probably looking at. Probably the easiest, most obvious objective is that 1884 area. To do that, though, there are two pattern setups I'm looking for. One would be a trap, right? Trap would be probably the best one before we get back down to retest a low. Right? Now, again, why a trap? Because although momentum is great, I get a lot of bear momentum right now. I don't want to sell too low. And again, I'm worried about this pendulum swing area here. So let the buyers try once, let them try twice here, get that trap. If we're really lucky between you, me, and the wall, mark up that low, mark up that high, right? Off a little bit of a hidden channel there, right? We get these quite a bit where the market will go up, it'll go 1, 2 down. You get that little trap high up there, right? See that? It's a very, very common pattern setup. We'll look for something similar right over here as we go lower. Again, it'd be a bull trap as we go lower. Or let's say, for example, they take out that low, they hold that pullback, and they jump going lower. At that point, it's on. We know now the pendulum swing was no big deal at all. The bears are holding that pullback, mark up that low, mark up that high, right? And we're shorting. Again, the first test, right? First test is always the best test. And again, I'm not going to go into all the small details here tonight, but my favorite entry techniques off the high of that channel are traps and buyer failures as we cross back above the moving average. I'll go into more details of those inside that free trading course that's linked up in the upper right hand corner. Again, grab the little button up there, the little information icon up there. Grab that button. You'll love that free course. You'll get a lot more deeper dive into all the entry techniques, the trade management, when to take them, when to skip them, everything like that. It's all covered in that free trading course. So those would be two ways I would like to sell this market. Buying this market market will be, well, it's very similar to the Nasdaq, where in the sense that we already have that big move down. If they can retest that low, kind of, as I always say, close the loop, if you will, I then can wait now for those bears to come in, try to get short a few times. 1, 2, their stops now are just sitting there waiting to be hit. Again, we're at support, but we're still very bearish, right? That's why I want to give those bears the benefit of the doubt, let them try a few times, then let it rip. And again, with that failure, keep your eyes on that reversal, new channel, and grab that first pullback right off of that low. A nested failure, and again, once you go through my video course, right, you'll know more about what a nested means versus a regular failure pattern. That nested failure right into that first pullback, it's a bear trap entry, it's a seller failure entry off the low of that channel. That will be a great trade long here off of those lows. Or let's face it, right? Maybe this thing holds. Maybe we turn into this thing now being a 1-2 go. And now we're reversing, right? 1, 2, 3 reversal, mark up that high, mark up that low. First test is the best test. Don't worry about that range. Don't worry about that range. If we see a nice 1, 2, 3, you better believe it. Everybody will be buying that first pullback. It's a bear trap, right? It's a buyer failure. We'll oftentimes see those. If you were to zoom in this area, right? It'll oftentimes be a trap entry, right? It'll be a trap off of that low. It'll be a failure pattern into pullback combination. You'll see a lot of examples of these as part of that free class, right? Trap, failure, pullback, right? All kind of zooming in. Again, this is a 1500 tick chart here in the gold right now. I'll drill down to like a 377 or a 512 tick chart, depending on volume tomorrow morning, and grab that entry off the low of that channel. Also, too, right? Let's say it really runs higher here. If it just jumps and runs higher here, which is always a possibility, especially on a market like gold, strong run up, shallow pullback, higher high in price, right? You know the drill. Buy that trap. Right, buy that trap. And I can really increase my odds of success if I can incorporate that trap entry off the low of a channel. Again, not required by any means, but I'm always watching those channel entries combine, right? When you can combine what we call a first channel trap, right? A 1CT in our trade room. Again, it's the first pullback below the channel. It's a trap, right? A first channel trap. Always one of my favorites in the trade room. Be watching for that tomorrow as we try to go back up and retest those highs. All right, guys, as we run late on the video here tonight, I've covered, I think, what the best opportunities will be tomorrow morning, no matter where you are, whether you're trading on your own or whether you're with us tomorrow morning in our trade room. So now you guys know my favorite strategy. The next thing is you got to come out and do it with us tomorrow morning in our trade room. I'll put all the information you guys need. I'll put the membership links to get started. I'll put all the information for you right in the description of this YouTube video. So grab that link in the description. Get registered, and I'll see you tomorrow morning at the opening bell. Don't be afraid to call the office if you guys have any questions. Don't be afraid to call that toll-free phone number. We've also got live support on the left, live support on the right. I'd be more than happy to chat with you, answer some questions, and help you get registered for tomorrow morning's trading session. Again, call the office if you guys have any questions, or just get registered right on our website. We got a bunch of different options to get started, so let me know if you guys have any questions about that. In the meantime, though, hope you guys enjoyed the video tonight. Hope you enjoyed it. Make sure you subscribe to our YouTube channel because, as you can see, I am not messing around with these nightly newsletters. I'll be back tomorrow morning with you guys in the trade room, 8 o'clock Eastern time. If I don't see you guys tomorrow morning at the opening bell, I'll be back tomorrow night, and we'll keep this party rolling with the next edition of our nightly newsletter. As always, thanks for tuning in. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.